Several weeks ago, I had in my live with Brenna had pitched this class or this interview here with Mitch about mortgage forbearance. What is it? What does it look like? Well, we had a schedule conflict, so thank you for your patience. We are back on the schedule, and here's what we're talking about today, right? Mortgage forbearance. What is it? What does it mean? What happens if you're in that program and it expires? What happens that your neighbors are on the program, and are we going to see a flood of homes hit the market and everything's just going to crash? What is this going to look like? So joined by Mitch with Pivot Lending Group, who is really an invaluable resource here for us. He's the in-house lender at my Keller Williams office, and really a great resource for many in the industry. So Mitch, go ahead and introduce yourself and give a little bit of a background.
Sure. Thank you for inviting me back from a couple of weeks ago that we didn't get to do. I think the floodgate of travel opened, and I think I took advantage of it unknowingly that for something else came up. So I am Mitch Friedman, been a mortgage banker in Colorado for the last 30 years. Started my tenure in Los Angeles, California, and then moved to Colorado in 1994. Continued to stay in the same line of work. And just have seen the industry evolve, i.e. the real estate side of the industry, as well as the mortgage banking side of the industry. And what we've been through recently with COVID and how it's impacted the real estate community in many different ways is what we'll talk about today, but I've never seen this before over those 30 plus years. So it's been quite interesting to follow. It's quite interesting to see the impacts it's had on homeowners, new home buyers, and realtors and lenders to like, because we've never seen this before. Neither did the industry, so they didn't really know how to react. So I work for a company called Pivot Lending Group. We're a local mortgage banker in Littleton, Colorado. As you mentioned, I am the in-house lender with Keller Williams Avenues. Congrats to the new move to downtown Arvada. That's awesome, Old Town. It's great. And being a direct lender that we are is very helpful because we can address these items like a forbearance concern very quickly with our underwriters that work with Pivot Lending, as opposed to being a broker and submitting our loans to other companies and waiting for that information. But nothing wrong with that. It just is a different way of closing transactions. So happy to be here and happy to educate the forbearance side of the world and see where that goes and how we have to work within it.
Yeah. So, a couple of personal questions, right? You started in LA. I mean, I have my reasons why I would move out of LA to Colorado, but what brought you here to Colorado? Why did you leave LA?
Well, we left, we were in Southern California, so very nice, close to the beach area. But the cost of living and having two daughters, which I had young daughters at the time, we didn't want our children growing up in the environment of private schools and the cost associated with that. And we just thought there was a better lifestyle for our whole family to check in with. And we ended up in Colorado on not a fluke, but a recommendation from a very close friend whose family lived here and said, "You got to go check it out. It sounds like what you're looking for, minus the beach, which is where I will vacation when I get to vacation." So that's really how we ended up here. And it was more about lifestyle change and having a different environment for our kids to grow up in.
Right. So you're living proof that it's not just the legal marijuana that moved people here to Colorado.
No,
right?
it wasn't legal then. And I don't, and when it became legal, there were a lot of people. It was amazing what impact that had on real estate, actually, from people moving in, but also a lot of investors buying real estate and then renting those out to marijuana growers, actually.
Commercial industry side of it, I think we could probably have a whole topic on that in and of itself. So, right, you mentioned father to two daughters, right? That's probably a big part of your life. So what does dad life look like for you today? Because I think you and I are on slightly different ends of that spectrum.
We are. So I actually have three daughters. There were two when we moved to Colorado, and then we have a native Coloradian daughter. Our daughters are older, 30, 28, and 24. So they are off living in their respective communities. A lot of extended schooling is what they're doing. And one is in the medical field. So she was very involved and had to be in the thick of the COVID era, the thick of the COVID era at Children's Hospital.
Yeah.
So she does that, and they're great kids. They're looking to buy real estate. Little challenging right now, as we know. So we've kind of continue to look for that, but the desire and the thrill of it got a little soured with the challenges of buying a home, but still looking, and we're seeing a little bit of that, a little. I feel like a little opening there to be able to buy property that maybe some people were priced out of.
Well, I've got a handful of homes that are not on the market yet that sellers have decided to sell, just haven't put it on the market. So I'll send that list on over to you.
That would be wonderful. We look forward to seeing that list. The longer, the better.
So last question, right? And this one might be a little bit off the charts here. Pineapple on pizza, where do you fall? Is this a yay or nay?
It's a yay. And I'm all about this and a little red pepper to go on this. I like spicy and sweet together all the time, no matter what. I will add jalapenos to my barbecue sauce.
Hey, there you go.
So, yeah, good question. And I knew how to answer it really quickly.
I don't think there's anybody on the fence when it comes to pineapple on pizza, right? It's like the toilet paper. Does it roll over or is it roll under, right? There's no middle ground. Nobody's like, I do it half of the time this way, half the time the other way. People are either picking pineapple off of their pizza or throwing that in the trash, or they eat it.
I've never been asked that question. I like that one. That's a good
one. So let's jump into this forbearance piece. So, in the description on this, I kind of mentioned, right, 2020 brought a slew of new vocabulary, right, when it came to social distancing, flattening the curve, COVID, coronavirus. I mean, I'm one of those folks that really did not pay attention to, the flu bugs that came through, right? The swine flu, the bird flu, H1N1. I didn't pay attention to most of that. COVID really kind of changed a lot of that, and it forced people to pay attention. And forbearance is one of those things that came up. Now, forbearance is not new. This wasn't a new thing in 2020. Forbearance has existed for time before. But really kind of became more of a source of topic. So, Mitch, for those that are watching, what is the mortgage forbearance?
Certainly. And you're right. It was there, but really never utilized because it wasn't as impactful as a pandemic turned out to be. And so a forbearance is basically some form of postponing an obligation that is owed on a monthly basis, in this case, a home loan. And so what our industry did is it created forbearance opportunities in many different fashions and options, but it was such an unknown entity and how to go about doing it. It was changing on a daily basis as to what those parameters were going to be when it first came out. And that's where I initially said our industry really has never gone through something like this. So the handling of it, with most commonly known Fannie Mae as the government entity that buys home loans and creates all the guidelines around this, had no history to pull from to say, we've been through this before, here's how it worked, and it worked really well. So they would one day say nobody had to make payments for a couple of months, and they could add those missed payments to the back end of the loan. To next day would say, no, actually you can't add it to the back of the loan, you have to pay it all up front at the time you bring yourself current, which meant people had to come out with more money than they ever had to come up with, and they weren't earning an income because they didn't have a job.
Yeah.
So it was very volatile, very roller coastery as to what the end result is. And even still today, as they extend the forbearance, it's still uncharted territory because the extensions have never had to come into play beyond the most recent one that they did. So I think they have it dialed in pretty good. And the presentation that we'll talk about will kind of nail down some of those opportunities for the options that people have. And, it's been going on for so long. So a lot of people are probably in the thick of being in forbearance if they did request to get to do that.
Yeah, right. And as we take a look at the mortgage forbearance, right, this wasn't a payment forgiveness. This wasn't just, hey, for the next 6 months or 3 months or whatever the time period was, I just don't owe that money anymore. It just disappeared, right? That money
Correct.
still becomes due. And that became a challenge, I think, for some folks when they were exploring and looking at the mortgage forbearance.
Correct, for sure. And that was, again, the unknown charter territory. People didn't know what the impact was going to be because there wasn't clear information being provided to them. So they could call their lender, who they're making their mortgage payment to, the servicing company, as they're known, and they would get one answer from one person and a different answer from a different person, only because people didn't know. The guidance they were given wasn't clear enough. And so, but to your point, yes, forbearance is not forgiveness. Forbearance is postponed, basically. So, and that kicked in, I wanted to kind of touch on when that all started. And it started way back towards the end of 19. Then it pushed for a year. They allowed it to go out through December 30th of 2020. So it went a whole year. And then, of course, we still had what we had with the pandemic and people still being impacted with employment and income. So they extended it. This is the government extensions through March 31 of 2021. So an additional 3 months. And then they extended it again through the end of June. And there's talk that if somebody were to request another extension, which could be the final one, but we don't know that for sure, would have to be done prior to the end of June to ask for another 3-month extension. So there is some proactiveness that the homeowner must do in order to get that forbearance continued to be extended. They can't just assume it's going to happen because it may not. And then all of a sudden, now they're truly late on their mortgage payment, and that's a major impact on their credit.
Yeah, so, and at that point, the mortgage company may start foreclosure procedures.
Well, that would be the case. They would get notification well in advance. But currently, the laws are servicing or lenders can't foreclose on anybody right now. So that's just a mandate from the federal government. Yeah,
so and even in the past, right, a lot of things had to happen before somebody actually went through, the foreclosure and
yes.
Got kicked out of their house. So,
yes.
So we talked a little bit about the expiration. What was the typical term for somebody? Was it open-ended? Was there a set time for the forbearance program? So if I called up my lender, summertime last year and said, hey, I want to do this mortgage forbearance, was it a set specific term or did it just kind of follow with what the government laid out?
Well, initially it was 3 to 6 months. And then from there, the government got their hands around what they wanted it to look like. And then that's how it got pushed to the end of 2020. And then further beyond that, knowing that things hadn't shifted enough in the economy to allow people to be back at work and back at their income levels, if that's what it was, or new employment to be able to satisfy that. And there's a big reason around why, big economic reason why they did this. And I don't know if a lot of people talk about that reason, and this is more my opinion, but my opinion is the last thing our industry needs, the real estate industry, is millions of foreclosed homes. That will not benefit anybody, no matter what. They'd rather see a loss of income on these monthly mortgage payments over a certain set amount of time than literally millions of foreclosed homes. And so that's where it all started, to step in and do that.
A lot of dominoes that could fall, right? If things hadn't stepped in and kind of gone the way that they did, the long-lasting impact, right? And when you say nobody, right, I know that there's going to be some people here that are watching this video that are investor mindset, and they'd say, no, I'd love for millions of homes just to hit the market. The downside to it is right, you have to qualify, you have to purchase, but then you have to find somebody that's willing to either loan the money or you've got to come up with cash. And then what do you do with that property? Can you get it rented? Is there somebody that's renting a home that didn't have a job, so they couldn't pay their mortgage? Now they've got really nowhere to go. Are you fixing and flipping a property? Well, if all these homes are coming onto the market, that's impacting the value that you can sell it for. So, it may sound okay if you're an investor on one side of it, yet you have to understand the big picture. Nothing occurs in a vacuum, right? That this would have had, right, long-lasting negative impacts.
Sure. And if you're an investor and had other rentals, you would take the market down with your rentals as well. So that it's really a win-win not for that to have happened.
Yeah, without a doubt. So, so glad for that. Now, let's talk about options, right? Somebody's in the middle of a forbearance, so they've not been paying their mortgage here for the last couple of months, but life happens, right? People still got married over the last couple of years, right? The last 18 months, they still had kids, they still got divorced, they still had life things that happen that typically then are followed by a real estate transaction. So, let's say that there's somebody that's watching that's in a forbearance, and their family's growing and they outgrew the space they were in. Maybe they were in a, 2-bedroom townhouse and they're needing a yard because they, are welcoming a new baby, and want to get out of that kind of hustle and bustle. What options are there for somebody that's in that kind of a scenario where they want to sell and they go buy something new, but they've been in forbearance for 6 months or more?
Right. And it's a good question. It's probably the most asked question that I get when I'm speaking with new clients who own a home, who also are in or went into forbearance. So some recent changes did take place, and that is if you currently own a home and you're in forbearance and you're able to sell your home and close on it prior to the next home you want to buy, so you can't do a concurrent or a closing the same day, selling your home and buying the next home. Mm-hmm. You must prove that you paid off your previous loan that was in forbearance. Then you've brought yourself current, so you've paid off your existing loan balance that you did owe, plus all the back payments from the forbearance non-payment. If you do that, then you can turn around and start a new home loan application and look to buy a home immediately thereafter. So that's a fairly new option that just came up.
So if you had talked to Mitch months ago before this was an option and it wasn't an option, give Mitch a call and it may be an option for you today.
It is. So that's part A. Though there are people who say, well, I really want to keep my home as a rental and go buy another primary home, but I am in forbearance. And so there's different guidelines for that scenario. Or sure, for somebody who wants to refinance, there's also a different scenario for that. And so the good and the bad of my industry is there's so many different options and so many different guidelines for different loan types. I'm going to try and kind of pinpoint the most commonly used one, and that is going to be conventional loans. So Fannie Mae loans. There's also what are called Freddie Mac loans, but they're both similar. They're conventional home loans ultimately. And so Fannie Mae came out with some guidelines on one, if you didn't make your payments for so many months, you could bring yourself current. So you could just write a check and bring current and you're done with the forbearance, you're out of it and you're good to go. And you don't have to do anything. There's no waiting period. Second is you could push those missed payments to the back end of your loan, and the loan term would be extended by however many months you missed in your payments. So for example, if you missed 13 payments and you had a 30-year term mortgage, that 13 months would be added to the 30 years. So you actually would have a 31 years, 3-month home loan term, of which you would have to pay back over that time frame. So that's the second option. The third option is they actually, with some cases, I've not heard of any been done this way yet. But again, people are still in forbearance, so we haven't really seen a lot of activity of what they've done yet. And that is extend that 30-year term to a 40-year term. And the reason behind that is not because they just want to push it out longer and lenders make more money on every payment. What the 40-year term does is it reduces the new monthly payment for the existing homeowners so that they're not still stuck with this higher payment that maybe is still a bit challenging financially to make the payment on. And so that's where that 40-year term is going to be very helpful for those who opt to go in that direction.
Yeah, again, to your point earlier, a lot of different options, a lot of different programs. So for those that are in it, right, connect with the resources and walk through different options because one may be more advantageous. I can think of a couple of reasons why I would want to go to a 40-year mortgage versus a 30-year versus a 15, right? I mean, they're different for a reason. They serve different purposes, and it depends on what my objective or my goal becomes.
Correct. Correct. And I'd like to add one more because it's a very important part of this from the real estate standpoint as well. Some servicing companies are also allowing those missed payments to become a second lien on the property. And so if you have a first mortgage that you took out initially with the property, and let's say you owe $300,000 and your 12 months of forbearance non-payments were there, and that added up to $10,000 or $12,000, instead of having to make up those payments, they're going to just place that as a new loan against the property. So there are two existing mortgages. The concern from now, let's say that client wants to sell their home, they have to remember that they also have another mortgage on there that's more than what their first mortgage payoff is. So their equity that they have is reduced by what's owed on that second mortgage. It's just a good reminder to the real estate community, when these things do start to kick in, we've got to ask those questions. Did you go up against, or were you involved in any forbearance payments? And did you happen to put a second lien on your home, because we have to pay that off when we sell your home?
Yeah.
So it's a good reminder.
Well, and to be frank, and talk to a lot of homeowners, it's not infrequent that people forget about a second mortgage or a home equity line of credit. Those things happen. It's not overly common, right? But don't beat yourself up over it if you just happen to forget, oh yeah, I had this other piece attached. And like you said, there's a lot of things in our lives that are happening, but it's an important, critical piece. So we want to make sure that we catch it before we're under contract and we're about ready to sell the house.
Correct. And then one last item on there, which is if let's say somebody ended up not filing for forbearance in the very beginning, but ultimately had to, and let's say they were 3 months behind, and then they were able to do a payment plan with their current servicing company and make up those 3 payments over, let's say, a 6-month period, where they chopped them in half. So they paid an extra $1,000 on top of their regular payment, and now they're current. So that 3 month has elapsed, or 6 months has elapsed, and they made up those payments. They have to wait another 90 days of making those next 3 payments on time before they're able to qualify for another home loan. So there is a 90-day period of making payments if you're coming out of a payment plan to pay back the forbearance dollars.
Right. So have the conversation with the real estate professionals just around the logistics on how that happens. Right?
Yeah. But an important one, because people may say, I'm done, I caught up, I was only a month or 2 behind. Yeah. And I've had that question too. And like, good for you. I'm glad you're able to get there. But now we still have to wait 90 days.
Yeah. So let's move forward here. Now, when we talk about real estate values, and actually, the whole time I've been in the industry, I keep hearing folks outside of the industry talking about how, well, these prices are going up so fast. They're going up so much. This can't be sustained. I'm just going to wait for this bubble to burst so that I can start buying real estate. And a lot of them are seeing this forbearance as their opportunity, that we're going to repeat what we saw in 2007, 8, 9, 10, et cetera, where the values just had really kind of decreased quite a bit. So, it's been my contention that we're not going to see just a huge flood of homes hit the market, and we're going to see issues there. So tell me a little bit about kind of what you're seeing with the data, the numbers, and more specifically here to Colorado or the Denver metro area.
Sure. That's a really good question. And I talked to a variety of homeowners, and I asked them, first of all, did you have to file, or are you currently in a forbearance payment plan? And if so, because some people call and say, I want to sell my home and buy another home. That's the new question I didn't have to ask before. And so I'm finding out a lot of kind of boots on the ground information, of which the information is, yes, I am. Oh, I didn't know that there was going to be any impact at all, because what I was told by my servicing company is, you have no impact whatsoever. Just let us know when you're ready to start paying. So there's not a lot of great information being conveyed, because there were so many people who filed for it that the form of communication back out to those clients was probably not as sufficient as it should be.
Sure.
So one, it starts with education, just like this conversation is right now. Second, what I'm finding is the market is going to continue, in my opinion, to be very, very healthy and very strong, even if we do have properties come on the market that were in forbearance or currently in forbearance, still can't make it as far as catching up with their payments or doing any kind of plans, because they haven't recreated their income level that they had prior to. And so what they decided to do is sell. Well, if you're a seller, you still have to live someplace. And I think they're going to become a renter more than likely. And so there is a avenue, I think, for a potential investment in real estate as an investor to buy a rental property with those for people who are going to need to move into them. So that's one option I think that's going to come out of this. Two, the market itself, I think, is going to stay very healthy because there's so much demand. And there was so much demand for the last 2 years, and then it accelerated again in the last 8 to 9 months. And then some people have gotten tired and said, I'm going to wait. I'm going to wait for this part of the market to kind of settle. And settle to me is not values dropping in any way. It's settle is there's fewer buyers bidding up the prices of property so that I can at least have an opportunity or chance to make a very fair offer and be able to purchase a home. So those people are still going to be there, which means there's still going to be demand. It's just going to be pushed out demand. And those who need or want to buy now are going to continue to be aggressive in buying a home. As those possible properties come on the market that the clients or people are in forbearance, they will be competitively priced. There's no reason not to. They're not being kicked out of their homes. They're not in foreclosure. So I think it's going to just add more inventory, which will be great, but it's not going to make property values decline 25% at all, in my opinion.
Well, I think we'll see some properties that are coming on the market because of the forbearance piece, right? Mm-hmm. They couldn't come current and they can't afford to stay, right? So we're going to see some homes come on the market. Now, I know that there are homeowners that have already gone through the process and sold. There are folks that are going to, look at the market that's going on in the Denver metro area. Maybe they like what's going on here with the growth. Maybe they don't, and decide, you know what, I'd rather live in Oklahoma and there's so much equity in my house, I'll just go buy something there for cash. And not that I know the Oklahoma market well enough to know if that's possible, but I'm just picking another state, right? But that's going to happen as well for some individuals. Some folks are going to hold on as long as possible. They're going to wait until they're absolutely kicked out. And some folks are going to be a little bit more proactive to try to save their credit. So just human nature, you're going to see this process probably drag on. And, come the end of June, if it doesn't get extended, we're not going to see July 1st come through with, 5,000, 10,000, 35,000 homes just hit the market all of a sudden.
I agree with you for sure. I think it's still going to be very seasonal and very systematic, and there'll just be we're still struggling to get normal inventory, and that's not even going to bring it up to normal because we're so far down.
There's so many buyers buying homes, not much inventory, and probably another topic. But the market values have increased so much, especially here over the last 18 months, that, folks aren't going to necessarily be in a hurry to sell it on the cheap. They can walk away with still potentially some money in their pocket.
Right. And nor should they. I mean, they've done everything they needed to. There was a pandemic that impacted them of no fault of theirs. Yeah. So, and this is everybody's oftentimes largest investment and oftentimes their retirement as well. Yeah. And so I'm, for the good of everybody, we hope that doesn't take place.
Well, and let's look at public relations as well from a lending institution, right? I don't know that I would want to be the first mortgage servicing bank, whatever, to kick somebody out of their house because they couldn't make their payments during COVID because they lost their job. Now, I'm not saying that it's not going to happen at some point. I believe somebody will be the first to have that foreclosure and get kicked out of their house when it's opened up again or when it's allowed. But yeah, just from a public relations standpoint, I would struggle if I was on the board making that decision to say, yep, let's be the first one to start making people homeless because the government shut down their industry. They weren't allowed to work. They couldn't find work and make their payments. Let's make that family homeless. I don't want to sign up to make that decision.
Probably you're right. You are right. And that probably won't happen very, if at all, and not very swiftly. I think it's still government mandated, and I think that's going to really dictate at what point in time does the mortgage note and the deed that all of us have signed on when we took out a mortgage, when did those guidelines kick back in to go, okay, you've had 2 years, let's say it went 24 months. Pandemics, I don't know how you talk about a pandemic being over. We're not there yet, and I've never been through one before. So whatever the scenario is, at some point they feel like enough people can be back at work, and the industries that really were impacted are back and open and running at more capacity. At some point they'll have to make that decision, and you take it from there. What's very interesting is so many people haven't filed forbearance as well, and many have been able to maintain keeping their payments on time. I'm actually more surprised about that there's been so many. And again, everyone I talk to who owns a home, I have to ask that question. And they're like, no, I've been fine. I've made my payments just fine. I've only had a couple of clients with refinances where they did take advantage because they needed to of the forbearance opportunity. And then with the refinance, a whole nother layer of guidelines, but we were able to actually roll in all those past forbearance payments into the new loan and be able to provide a lower interest rate, so their payment was even lower than it was prior to the forbearance starting. So it's you're just going to see all different things that are come out of this. And my hope, like yours, is that nobody gets kicked out of their house, and that people are able to make ends meet however they need to, or sell their home and just scale down and buy a smaller home, maybe, or move from a home to a townhome or condominium. It's not that they have to never own a home before.
Yeah, absolutely. And I think, when I look at this series of interviews that I'm doing, I think, the overwhelming theme is that there is information that's correct and there's information that's not correct. And I think people make a lot of assumptions and they're afraid to ask the question because they don't want to be told no, or they don't want to be rejected in their mind. And yet what I want to convey is, and Mitch, I know this for you, I'm going to speak for you. So you're 100% open to have the conversation, and there is never any judgment as to somebody's scenario, somebody's situation. You truly come from a place that you care and want to help them accomplish whatever it is their goal is. Sometimes the answer is no, and sometimes the answer is not now, right? But there's always that conversation that can be had. So there's so many resources available for somebody that might be in a scenario to get the help that they're looking for. All they got to do is raise their hand and say, hey, here's a scenario that I'm in. I need a little bit of help. What are my options? What does this look like?
Right. And as much as there's that information on the internet, it is not specific to their scenario, because there are so many questions that have to be asked to really hone down to where they fall into all this different criteria that we just talked about, and how that impacts them. And then what are their options and what's available to them. And that's where an individual like myself, and there's other very well-known and experienced loan officers in our community that have this information known and can guide properly to a place of, if you should decide you want to do this, here's what you qualify for given your current circumstances. Or if you want to make some changes or to shift some things financially, here's where you can get to when the time comes.
Yeah, really no different than jumping onto WebMD and researching some symptoms and coming up with whatever disease it might be in your head that you have, versus going to your doctor, going to a specialist and finding out what's really going on, right? So Mitch, I'm going to make you an honorary doctor here, a doctor of mortgage. Don't just read what's going on the internet. Come to Dr. Mitch, and we'll get real answers for your specific situation, because the answer may be yes. Even though somebody in a similar situation, the answer was no or not now, yours might be yes, right? It does come down to the individual situation scenario.
That's correct. And to your point, it is a diagnosis of how do we get you there, and how do we cure it, and hopefully we can do it naturally and not with a lot of synthetic medicine.
Absolutely. So want to kind of tie a bow on this. Anything else we haven't touched on for forbearance that you get a lot of questions on from clients, or something that is maybe not as well known that you just want people to be aware of that we haven't covered?
I do actually. Probably another most common question is, how has my credit been impacted by me not making forbearance pay or making mortgage payments and being in forbearance?
Yeah.
And the answer, and it's interesting, when I see the credit reports for people in forbearance, what I'm used to seeing is every single month going back 20, 24 months, monthly payments being made, how much they paid, when it was received, how their loan balances declined. That's what our credit reports show us. Now, what I'm seeing is zeros with payments made and the balance not declining, the balance is remaining the same. So people's loan amounts have not declined because they're not making a payment to reduce the balance. The beauty, though, is that there's been zero impact on people's credit scores. So I've had people with 800 credit scores who haven't made a mortgage payment in 12 months because that was a mandate by the government. And that is, you cannot impact a credit score based on needing to take advantage of the forbearance option. So that's probably the most often question that I get asked.
And, again, when we take a look at big picture, how this is all impacting our economy, probably good decisions made overall that have helped kind of propel this and keep it moving forward. And the hope with all of this, right, anytime big decisions like this get made is we're not just propping up a problem that gets pushed over later. And we've seen things like that happen, right? Some of these things I think are sustainable, just kind of the way that they worked. And overall, I think good decisions. Folks and I were chatting, last year, kind of in the thick of COVID, and they're asking what's going on with real estate, what's happening with the market. And I said, well, we're going to be probably 18 months to 24 months on the other side of this before we really see the impact at minimum. Now, this has gone on a whole lot longer than I expected, and probably a whole lot longer than most people expected. And right, when we take a look at the impact that it's having, what does this look like? Again, real estate, we tend to decisions that are made today and things that are happening today typically happen way down the road a little bit.
Right. And the phenomena that happened in real estate is people wanted to buy a home more so than prior to the pandemic. And so it was a phenomena that I don't think many people would have seen coming from the pandemic. And it's so the question is, do we really not know what's going to happen afterwards? Because we didn't see this one coming either. Yeah. And so that's the fun part of our industry is, how do we, when we do our roundtable thought processes, and that is, what do we think these impacts are going to look like in 12 to 24 months? And how can we be best prepared to serve our clients' needs at that time so that we're not playing catch up? We've kind of thought through a lot of what the scenarios could look like, and we guided our clients today for that next 12 to 24 months. Yeah. And that's a huge part of our value that we add to our clientele that really isn't always thought about, because I guess the second most question that gets asked me all the time is, what are the rates today? So it's between that and how's forbearance affecting my credit? And it all becomes insignificant until we know you can make something happen based on one of the items that we're talking about today being forbearance. Yeah. So it's easy to answer what's the interest rate question. They were very artificially low during the pandemic too. That was another thing that we did not expect. I mean, they went from 3.5% to 4.75% and 5%, like 4 days after the major part of the pandemic was hitting back in March of 20. And then they dropped down to 2.5% 4 weeks later. That's never happened. That is such an unusual event, and hopefully will never happen again. But that just shows how out of control the industry was, because nobody knew what the heck to do at that point.
So. Well, and anybody that's going to be buying a home a year from now or 2 years from now, if the interest rates are up, right, 4% may sound like a lot today, right, because of what some of the interest rates were and what they've been. Keep in mind the historical average has been about 8%, and really since about 1990, that average has dropped down to about 6%. We're still really low. So, if you're on that side of it, great, you're still doing well. It still comes down to affordability, and that's going to have an impact. So don't be too upset if you're paying 4%. a couple years from now. The going rate's going to be whatever the going rate is at the time.
Right. And the low interest rates is also what's continuing to keep the market strong.
Mm-hmm.
So if mortgage rates went to 7% next week, you would definitely see a lot more inventory.
Yeah, a lot more inventory, a lot fewer buyers.
A lot fewer buyers. So it would be a flip flop of what it is. That's correct.
So if there's one piece of advice that I could give the feds, and trust me, I doubt they're listening to my Facebook Live and my YouTube channel, so they probably don't care what my opinion is. But it would be, let's not create a scenario where the interest rates just spike all of a sudden. If they're going to go back up to 7-8% at some point, it'll be what it is. But let's gradually get there. Let's not just hit the elevator and go right up.
Yeah, and I think those who are in that position, i.e. Janet Yellen and gang, understand that. They've been around a long time, and they understand that keeping interest rates at an even keel with inflation is going to make sense, and that's what they've been doing now. And the good news is they do wait for information before they make those decisions, because I would have told you 2 weeks ago rates should have been higher because everything was going up in cost as far as inflationary. And then all of a sudden they got reports that said, well, hold off, like today. More jobless claims came out than more people filed for not working than they expected. So had they raised the rates, it wouldn't have made sense. Yeah. So I appreciate that they're looking at that information. And I do have a direct access to her email, to Janet's email. So I'll be sending her this right after we're done so she can make sure she understands what to do next.
Send her the link to the YouTube channel. She'll get some great real estate advice as we go through. So
she still has the BlackBerry.
She still has a BlackBerry. Yeah, I was never cool enough to have a BlackBerry when they were cool. I don't have the iPhone because I'm not hip enough. My technology life, I finally got a pager when everybody else was getting cell phones. So I'd get a page and I'd have to ask my friend to borrow their cell phone. That's how non-tech savvy I always was.
Right. Well, you've come a long way, Matt.
Yeah, well, baby steps, and I like idiot-proof technology. It's here, plug it in, this works.
Right. Exactly.
So, Mitch, one final question, right? We'll end on a personal, right? Where's the last place you went golfing?
Oh gosh, I was just in La Quinta, California. Okay. Not on a PGA course, but close to one, and I swung one club and said, "Oh, my shoulder hurts. I better not play golf today." So that was the extent of my most recent playing. I did play in a charitable tournament in Broomfield last year. Okay. And at that point, I learned I need to rehab my shoulder before I play any more golf. As you know, I'm a tennis player, so I can play tennis. I just can't play golf.
Well, I mean, you swing with both of them on there, right? Shouldn't be too big of a deal to take that club and just whack a little ball all the way down the
Without a doubt. It is not easy to do that with a putter all the way through the course.
No, probably not so much.
Yeah.
Regardless of the movie Tin Cup, right? You're probably not using your 7-iron for everything.
Right, exactly. Though I wish I could swing a 7-iron today.
Yeah. Well, again, Mitch, I always appreciate your time that you invest in doing this. You're always a phenomenal resource for the agents in our office and a lot of agents outside of our office. I know you've got a lot of clients outside of Keller Williams. But this is phenomenal. And the folks that are watching, I hope you find this valuable. Drop in, leave comments, ask us about the things that you want us to chat about. We'll make sure we get that stuff on the docket so that we get those interviews really set up for you.
Excellent. Well, thank you again for having me. Have a great weekend and look forward to our next time to get together.
Perfect. Sounds good. Thanks so much, Mitch.
Thank you, Matt. Bye-bye.
Bye.